Hey there, everybody. Thomas with Basecamp Trading. It is Tuesday, July 9th, and we're going to take a look at a comment I receive all the time about trading futures. And one thing that a lot of people think is that in order to trade futures, you have to have a very large account and you have to be able to take a very large risk, especially if you're looking to swing trade, where you're getting in on based on daily price charts or higher. Well, one of the number one trading markets out there is the S&P E-mini, E-mini futures, which is at ES. You see people talking about that all the time. And the thing about the S&P E-mini is this is actually a pretty big contract. It started off not that large, but over the years it's continued to grow as the market's gotten larger. And now you're trading with a notional value with just one contract of roughly $150,000, because take $3,000 times $50 per point, that gives you your notional value. So when you're trading one contract in the S&P E-mini, you're trading a $150,000 position. Well, that's quite large, at least for most traders out there. So with that being said, there is a new way that you can be trading, and that's using the micro mini contracts that they just came out with. And for example, for the S&P, it's MES. So it would be at MES or micro E-mini S&P. Now this contract makes it a lot easier. So instead of having $3,000 or $4,000 margin requirement or $5,000 margin requirement, depending on volatility, your margin requirement for this is, I think it's $600 or $800. So it's much, much lower margin requirement, and it's 1/10 of the size of the E-mini S&P. Now, if you're day trading, it makes it a little bit more difficult because you're not really making all that much per point. Whereas the ES is $50 per point, the micro E-mini is only $5 per point, because again, it's 1/10 the size. However, this makes it really easy for you to take swing trades and place your stop at the appropriate level where you might be risking 10, 15 points on a trade because you're going for 100 points or so. And it allows you to get in and give it the room it needs to move without risking a huge amount of money. So instead of having to risk $2,000 or $3,000 on a trade, you can risk $200 or $300 on a trade and still be perfectly fine with it. So overall, the whole reason I wanted to talk about this is just keep in mind with trading futures, yes, there is a lot of leverage, but there are also options that you can use if you do not want to trade with as much leverage, using things like the new products of the micro mini contracts. You have the micro S&P, micro NASDAQ, micro Dow, and micro Russell 2000, which are all pretty liquid and good enough to trade in and out of fairly easily. So keep that in mind. This also gives a lot of really good opportunities if you're quick, where you can do arbitrage trading, short one and long the other, with the micro S&P versus the S&P futures. But with that being said, that's a topic for a different day. So keep an eye out for it. If you're looking for a product that you can trade, futures product you can trade that has lower risk, same volatility, but less notional value per trade, the micro mini contracts are a great way to go. So that being said, we're going to be doing a workshop on these coming up here in the next month or two if you want to learn how to swing trade these markets and using the micro mini contracts. But that is it for today, everybody. I will see you all bright and early in the trading room tomorrow morning. Don't forget to like and subscribe. And until next time, everyone, happy trading.